Hey, this is Elliot Wavesage. I'm going to go ahead and do a quick video. This isn't financial advice. Always do what's best for you. Use this for your education and entertainment purposes only. So this is going to be challenging for me to do videos in the next couple days, but I thought it's important to get one out tonight, given where we are in the market. So the market has been pretty persistent to the downside. It is in an area where you could expect a bounce. If it's behaves as we have seen the market behave typically in the past throughout the whole bear market, because you have a three-leg drop here, and we should bounce. We could bounce up to 34,003 and then make another leg lower. This area here would be an area that I would, safely cover shorts or take a long position, but I don't recommend long position here given the market conditions and what we're seeing. So really, I want to get rid of that box. And really, when you look at the nature of this wave, this two wave is pretty extreme. It's a little smaller, a little smaller. I actually think we could still be in another two wave that will be at a smaller degree than this. And it wouldn't surprise me that we actually haven't had the 3 of 3 moment that some people think have already has come and gone. So this count that I've shown here is pretty valid, and this 2 may not go much higher until you can get a catastrophic decline. So you got to keep an eye on that. The other alternative is we do bounce, but that bounce will fail as we finish 3, and we go into a series of 4s and 5s, which should probably take us down to 32,900 before we get a bigger rally. So it's a very tricky count and market, but I don't like to be on the long side of this market. A lot of people are declaring it's time to buy. I think that is dangerous given the conditions that I'm seeing across the market, even though by price it should bounce and if it was a traditional behaves in a traditional way, it should be an easy long opportunity right now. But I don't like it given the situation across the market when you look at individual stocks that haven't hit the downside, where we are with bonds, where we are with oil. It just doesn't, in the dollar index, I do not like the long side. I do believe conditions are where you could still see more of a catastrophic sell-off. The VIX also today closed at a very interesting level. It closed right above our neckline, our trend line. As you can see here, we broke out essentially a back test. So tomorrow's trading could be huge. It could have a huge downside move to get that VIX up to this 26 area. If you really need the VIX to come back down and have this become like a false breakout to get a more substantial rally, so tomorrow is so important to do that. But if the VIX cannot do that, it will squeeze higher and we will go much lower tomorrow. So very interesting time. I do not like the long side of the market. The VIX is also warning me. And if you've been following me, we've had this pattern, and we forecasted this pattern to play out while we were still forming the head. So this is exactly what we expected, and what I continue to expect is a 26, a pullback, and then I believe that pullback will break through these other areas of resistance and eventually end the potential bear market at a VIX of 48 or 52. That's what I'm looking for. And once we get that, then I believe we will be at the end of the bear market. The surprise would be we break through that level and hit the 84 level, which would be the grand super cycle crash or higher. So this is where I think we're heading. Dark times are coming, and if you think what has happened recently has been terrible, you haven't seen anything yet. Buckle up. Okay, so what's the dollar index, student? So I was telling you about the dollar index, finishing this push higher, we should be pulling back in B. And I'll let people assume this would be supportive of the market, but this could actually become rocket fuel for commodities and backfire and really drop the market, as this provides tailwind for oil to go even higher in most commodities as the dollar drops. So don't think for a minute this is bullish for the market. You can't infer that. It can be very bearish. So this dynamic is not that easy to understand. But I do see a pullback, and then unfortunately a whole nother run higher. And now it looks more likely we'll get to this 112, 113 area before the bear market may be over, or this decline is over. That means gold should be going lower and Asia should be going lower. That's what this is telling me with this setup. This also is a warning because as the dollar has strengthened, rates have continued to go higher. So that's something we want to keep an eye on too. Now, what happened today in the bond market is very interesting. So today, for the first time, we hit the buy area on some of these indices. Now, like the 10-year, again, my Elliott wave count has us needing a 4 and a 5 to finish the move on the 10-year. Here on the on this first impulse out, as you can see here, let's go back where we got this here to finish this wave 5. So this area is super strong resistance. Right when we get to 485%, I mean, we're talking resistance that goes back a long time, like on the chart, just regular good old-fashioned resistance. Look, you can see rejections in this area multiple times. Here it was kind of like support. Here you had some support, but then you can even go back. It's hard to see the data, but you can let me go see if I can get it on the monthly. Maybe it'll show up better on the monthly. Still hard to see, but you could see even back here it was resistance where we spiked up and then we plummeted back down. And it's hard to see it. It got rejected here in the 60s and rejected back. And here we finally broke through in 67. So the first test of 5% is almost unlikely to break out. It's almost certain to be rejected in this area of some magnitude. So I do expect that rejection. But that rejection will eventually fail, and then we will break through this level, unfortunately, in the future. But I do think for a trade, this is due for a relief rally in the bond market. Now, again, people think that's bullish for the market, but it may not be, because it could be a panic going into treasuries as equities crash. And people go into bonds because that's what they do in real market panic. So I do believe that it will be a massive catalyst. The 20-year today hit the sell area finally. Today, and guess what? It on the shorter time frames, it's getting rejected immediately here. So the 20-year is getting rejected. The 30-year also is in our sell area. It's been hanging around, but it does, every time it's come in, it's getting pushed back. I expect it to be pushed back as well. So the bond market is topping. The rates are topping right now. Today could have been a blow off top in rates. Just keep that in mind, just to let you know what's going on. Gold's breaking lower. I expect it to go lower. We forecasted gold to hit these areas. We shorted gold here, and now that has opened up much more downside, and this will be dollar strength and risk off in the market until we get down into this $1,800, $1,700 area in gold. I don't like trading Bitcoin. I think it's playing games. I do believe it's going lower. And then the Hang Seng is starting to break some pivots in a 1-2, 1-2, 1-2 crash formation. I believe we are going to see China essentially have a market crash really at any moment. Could they be ready to invade Taiwan? Who knows? But this is what the chart says. Very dangerous to be in China right now. Keep that in mind, especially if the dollar is going to strengthen and gold's going to fall. That chances are China will also follow suit. The overall indices, the Dow is in the 1987 danger area, and it's been persistent selling, just like we saw in 1987, and then eventually it just floodgates open. We're not, everyone's looking for a relief rally. I think that is not a wise thing to be trying to play for. But I mean, you got to do what's best for you. It could be, like I said, this 3-4, or we could be in a whole nother 1-2, which I think that's what it is. Here again, we could be doing a 3-4-5, 4-5, which would bring us down to probably 4-11. If we don't do that, then it's another 1-2, and I believe we should get rejected right around 432, and then that could be another area to short if we get up there. So just keep that in mind. This is probably what I'm thinking we're in right now, something like this, and then we can go down. We can crash from there. I didn't, these boxes here, if it was a more traditional corrective market, you would again want to cover shorts and go long. I still think it's smart to take some profit here, but I would not go long in this area because I do believe there's more downside. And then here you have technology. We could be in a 1-2-3-4-5. Again, we could be done a wave 4, but I would prefer that we're in right now is some kind of 2-wave, and I had to change my labeling for a couple days, but basically I'm looking at this as a 3 right here, and then we could have a 4, or the other option is another 1-2, and I believe it's a 1-2. Here you can see a lower low sequence, and we really haven't got to the downside levels that we need on other tech stocks. So this should continue lower despite any relief rally that we're seeing right now. So we should see this continue to drop. Here, even if 2 does come up, it's a short-in opportunity. I would not want to see 2 exceed the magnitude of that wave. So maybe I think this would be too strong. I think somewhere around here would be a good area for it to fail. If it may have already be done already. So we'll have to wait and see what happens in the next couple trading days. So in the IWM, everyone's like, oh, it's all over. Unfortunately, we're just getting started in the IWM, and I believe this is also another 1-2-3-4-5 for another 1, and we're in this 2-wave that could still go a little bit higher before we drop into this final area, which I'm looking for. So I do see more downside coming, more extension lower. It's hard to believe the market can keep dropping, but it's going to do that. There's a lot going on underneath the hood. The market, there's a lot of people scared to short here because of what's happened this year with the market just melting up, and then there's people just so eager to buy the dip no matter what, going putting all that money in and lose. So I think there's just a perfect recipe for a market crash, in something really catastrophic. Oil also is almost in our sell area here, and like I said, I felt the market would be ready to crash and sink for a crash when oil was trading above 96. The bond markets hit their sell area as well, and the dollar index peaked out, and all those things have happened. And so I believe now the market could be in sync, ready to roll for a crash, which really may just be all of a sudden money moves into the bond market, buys the dip, and generates a massive liquidity suck as money goes back into the best, lowest cost asset, and as money moves into bonds, it moves out of other things, liquidity is removed, and then you start seeing bank failures, credit events, and then more panic in the bonds. So that's kind of what I'm thinking is going to happen here, and I do think we're in a really dangerous moment for the market. If you are long the market, just understand you could wake up and lose a good portion of your money. If you're in calls, you should expect to lose everything and have the calls close out of the money, and lose everything. And if that's cool with you, then good luck. I just don't think it's worth the risk at the moment. All right, so that's the market, guys. Again, and like I said, I could be wrong, but do what's best for you. But I've been right so far. If you followed me, we gave the short areas here and here and in here, and this was a bonus short that no one expected. and then essentially it's been a straight down crash from there, just like I had predicted. Everything has happened according to plan. Again, and if you really look at this head and shoulders pattern, it really is not played out. You need, if you really do it the classic way, you measure from the head to the neckline here. And again, it's not going to be perfect, but I'll try to do the best I can. I'm not at my normal setup. That gets you down to a price of 406. So as you can see, we're not near where we need to be, even for this pattern to play out. We broke a trend line here, this channel line, and now we're testing the major channel, and I believe this major channel will be tested. And then I think we could have a pretty good bounce off of this dark black line. And people, if you're trying to follow me, go, what does this dark black line represent? Well, it connects all the way back to the March 2020 low, through the October low, through the March, and so ironically, I think this is going to get tagged again. And what I'm looking for is a more substantial bounce when we tag this, that and then eventually fail. If we were to cut through this trend line with no bounce, then I think you are going to set up for a crash, and maybe the grand super cycle crash even. That's the type of thing I'd like to see. No bounce. We just cut through this area, and we need to wait and see how we handle this. If we do bounce here, then the 1 2 1 2 is not. It's really a 1 2 3 4 5 4 5, and then we hit that, and we bounce around for a while, and then probably going into the new year, we have our final leg lower in the bear market into March. That's always been my forecast. Do what's best for you. That's the most likely path. The unlikely path is a grand super cycle crash, which means we just don't stop. We just keep going, and only gets worse and more. It accelerates. And watch the VIX. That's what you want to see. The VIX build higher, hold support, not fall. That's what we want to see for the grand super cycle crash. And then, of course, the other alternative is a bottom to new highs. And if we're going to see that, we're going to need to, recapture, and you want to get really flip 435, 36. You really want to get back over 433 to start hoping for a bigger relief rally, which would be surprising, which would lend itself, because this would be 3 waves down. And you could really make this 3 waves, and even though I have it as 5, and then you can start making the argument this whole thing's corrective, and yes, we are going to break the 458 high. So this is kind of do or die time for the bulls. The bears are in control of the market. The bulls need something to get this market going. Powell is supposed to speak tomorrow. Will he pump the market? Because there's been so much blood in the street. No one knows what he's going to do, but we have a government shutdown. That's got to be negative. We have these strikes going on, and you still have other black swans that can happen. So no one can predict the future, but as long as oil keeps doing what it's doing, it's going to pressure the market. I do believe interest rates are close to a top today. Could have been a blow-off top in rates in terms of sentiment and bearish sentiment, and bullish, bearish sentiment in terms of a capitulation, given everything. Now every bond is in the sell area. We tagged it. Let's take a look at TLT. That was missing the area a little bit. I did not look and see if it hit that today. We are still a little short, 88.14, 87.56. My swing count, again, I can change this to make it finish, but if you don't want it more elegant, it would be nice to see a bounce here, and then one more low, just like I've got there, to hit this area. So it may not be all clear in bonds if you want to go long bonds, but you're getting to the point where it doesn't really matter in some ways, because the opportunity is so great, given the little bit of risk, because I do not think there's enough stochastic left to drop this in another 3 where this is a 1-2. I just don't believe that's the case. I believe we are finishing up this massive move lower we should have a relief rally that goes, back and really retraces 50% of this move. So the TLT could, really come back up to like 140, 130 in the next 12 to 18 months, maybe even sooner. TMF has been getting a lot of questions on that here. So as you can see, we're in a fifth wave of a fifth wave of a fifth wave. I mean, if you're praying for if you're losing sleep over it, then you're not trading it right. It should be, as it goes lower, just exciting because you can buy more cheaper, knowing what is coming on the other side here. We could get up to 14, 15 bucks. So I mean, this is just the market is giving you free money here, in my opinion. Of course, there's risk, but you got to do what's best for you. But if this is wave fives, let's take a look at the divergences. So let's start with the daily time frame. And as you can see here, you have a lower peak, a higher peak. So this confirms we're still in wave five. So that's good. So we are in a wave five. You have a daily divergence. You don't want to, if we see that daily divergence erased, the trade setup is lost, and I would leave the trade. I do want to say that, but I don't think there's enough more bearish sentiment to do that. The 4-hour, as you can see here, we also have still 4-hour divergence between this peak and that peak. So that also signifies we are in a wave five of a wave five. Okay, and then even on the shorter time frames, we still have divergence with a lower low here. If I can do this, as you can see, the bullish divergence. So we're in a 5 of a 5 of a 5. And I probably can go even to the 15-minute time frame, and even within that wave, we're still in a 5. So, I mean, there is bullish divergence essentially in every time frame. Weekly, right? 15, 45, 4-hour, daily, weekly. How about the monthly? Even the monthly. Confirming everything that we know. It's an impulse and a 5 of a 5 of a 5. So, I mean, this is a huge opportunity that just doesn't come very often in the market, where the market is essentially giving you a silver platter, a trade on a silver platter. It just would be really surprising to me to have this catastrophic drop in bonds or rates, given the sentiment extreme already that we've already seen. A lot of the bearish energy has already been wasted in bonds, and a lot of shorts already leveraged short. There will be a massive short squeeze in bonds in the future. It won't happen right away. As you know, the way the short squeezes happen, you get an initial rise, and then you fall, and almost looks like you're going back to new lows, and then it kind of holds up, and then we kind of meander, and then it goes parabolic in the squeeze. And I believe that's what you'll have to be patient through as this thing plays out. So you'll get a bump, a really nasty fade back down, and then a massive spike on the squeeze. And who knows how high that can go. So this is a great trade opportunity. It's the only thing I'm interested in right now in the entire stock market. Everything else, there really is no good trade at the moment, unless if you haven't gotten your position yet on the short side. I would not short here either, because you could still be shorted into a hole. Nothing's guaranteed. So if you think like, oh, I just want to short and we're gonna crash, because Elliott Wave Sage said we're gonna crash. Well, I think that's not a good way to trade. You really need to wait for a rally and then short those rallies, and we're just not there yet. So just keep that in mind. All right, guys. I'll just kind of click through some tech stocks, and we can see if there's anything else. So Apple, again, in a 1-2-1-2, we're going down this much. See all this downside. This means the market's got to go lower. Let's take a look at Microsoft real quick here. Microsoft, Microsoft broke the pivot, like I mentioned. And where's my target? I've had it here, 280. That is a lot more downside coming in the market. Just two stocks. Oh, Nvidia. Everyone's like, oh my God, Nvidia. So what is this? What could this be here? This is a 1-2, 1-2, and this looks like to me a 1-2, 3-4-5 for another 1-2. So I would relabel it and that means we haven't had the 3 of 3, which makes sense. So you have a 1, 2. I don't have that labeled, but and then a 1, 2. And by the way, we had the short area here. Look at that. And guess what? If this 2 can make it up, if for some reason it could come back up to 440, that'd be a great short opportunity again to play this 3 of 3. We are coming down. And look at this top-end pattern. It's beautiful top-end pattern, distribution pattern that is going to fail, and we are going to come lower here. Tesla, right on the downtrend line, that is going to break, and we should be going lower. Like I said, everything to me looks like another 1, 2, and looks like wave 2 in Google. Should be coming down lower. How's Amazon doing? Amazon's trying to bounce. And again, this is the more traditional area where we bounce, and we haven't seen it. So this looks like just 5 waves down here with a connector. So 1, 2, 1, 2 here. And yeah, a lot of good plays in the small caps, but this is just shorts taking profit here in everything else. But I do believe there's more downside in the Russell. So I'm not interested in chasing any long positions. Just make that clear. Take a look at DraftKings. This is a popular one. So really DraftKings needs to go to 23.65. So this tells me there's more downside, even though we had a little bit of a relief rally today. So that is it for now. Let's see how anything else is doing. How's NEO doing? An A, B, and a 1, 2, and that looks like a 3, 4. So one more push down here. If we do break this low at 698, it will invalidate this count. It will invalidate this count, and it will open up much lower prices. So just keep that in mind. Again, I don't like the long side in anything right now in this market at the moment. So in summary, it's tough to say which path we're going to get with the market. There's 2 paths: a crash, a grand super cycle crash, or just a traditional bear market. I feel I don't think we're just going to rally to new highs from here, even though this is a typical 3-wave area for a bounce to new highs. I believe whatever happens in this wave 2 is going to fail. This is the crash pattern, the grand super cycle crash pattern I have here. The other alternative is something a little different, where we're in 3 like I have here, and we'll have a series of 4s and 5s that play out. We come all the way down to this trend line at 411, and then we have a much bigger rally of choppiness and sideways action all the way, maybe even through the end of the year. And then into the new year, we take that final leg, capitulation leg down, and to the new levels, break the October lows, end the bear market by March. That's the game plan. That's what I think will happen. But you can't rule out the market crash possibility. So you got to be careful trading this market and buying the dip right now. And if we get this to 432, it could be boom, lights out after that. Good luck, and stay safe trading.